All right, good morning, everyone. Going to get it going here. Okay. U.S. markets last night had a reasonable session. Really, to be honest, same sort of thing. Just can't hold a good man down. This place just manages to hang in there at all costs. Every time we look like we're going to up and down, we're going to trade off weaker. Every bounce or every pullback is to be bought. We keep seeing the same theme over and over and over, and this market just can't fail. We'll go over that a little bit on the charts. It's obviously more specifically pertaining to U.S. markets, but that's the leader, and so when the leader never has a pullback, it creates a lot of squeezes in the market when everyone thinks things are going to collapse. So we're going to continue to watch it closely. We had yesterday's mortgage apps that came in significantly lower than the previously reported number, which I don't think is that big of a deal, but something to look at. Obviously, we're still waiting for more clarity out of what's going to happen on Ukraine, but nothing there yet. Moving on to Asia, one of the things that I will make note of, we did have Shanghai that actually rallied this morning up over 1%, but we had the second corporate bond default. Oh, sorry, it didn't actually officially default. They halted trading on one of the solar stocks there as of this morning, kind of maybe adding a little bit more fuel to the fire there. I think what's really impacting the slide on the copper price, which traded to the lows of 2009 yesterday, is exactly what's going on in China, and the fact that lending standards have gotten dramatically tighter there. A lot of people were, using physical metals like copper and iron ore to finance other activities, and because things are getting tighter in the lending market, those sort of things are starting to go away. Interest rates are going higher, you're starting to see an unwind of those types of trades. So it's something that we'll continue to monitor going forward. How much of a further downward impact it's going to have on those industrial metals, I'm not really sure. We also have had Japan, which is out this morning, had good machinery orders, but didn't really weaken the yen too much. In fact, the yen's stronger now, and so the gains in the Nikkei were limited because of that. All right, we got a whole bunch of stocks that are going ex-div tomorrow. That's Anglo's is 59 U.S. cents. We're looking at Discovery, Sun International, ShopRite, Massmart, and Grindrod. So keep those in mind. Today's going to be the last day to trade. Obviously, Anglo's is reasonable sized divvy. Massmart will obviously also be a pretty decent sized divvy there relative to the share price. All right. Market data out today. We've got a whole bunch of stuff out again today. Like we said, we had the machine orders out of Japan. We had weaker than expected retail sales and industrial production numbers out of China, continuing to throw really weak data at us. I think it's really important, and I don't see any way that they're going to be able to hit the 7.5% GDP target. And then we've got a whole bunch of other stuff: the CPI out of France, retail sales in Spain, CPI in Italy, mining production here locally, as well as manufacturing production. We'll keep an eye out for that at 11:30 and at 1. And then in the States, we've got retail sales, initial jobless claims, import price index, and Bloomberg consumer comfort. So I think obviously the jobless claims is the biggest number of the day, but after non-farm payroll number on Friday, it'll probably be dwarfed a little bit by that, and we'll probably see less of a reaction than we may normally see, unless it's just very, very dramatic. All right, let's get into the maps. First thing that I'm going to have a look at here is let's look at some of the other indexes. And we were just saying a second ago, what we've seen here over the last week and a half or so is very quietly we've seen a pullback on some of the major. I'm not even going to look to draw any lines. I just want to kind of show you the charts and the pullbacks that we've seen. So this is the DAX. You can see here in the last couple weeks, and we've seen a pullback from up around north of 9,700 all the way to as low as 9150. We're talking about a good 5% from the top on the DAX. FTSE, we're looking at the same sort of thing. A FTSE, trading is high, really failed this level up here at around 6840. It pulls all the way back to 6600 yesterday. Same sort of thing. We're looking at about a good 5%, maybe 6% in those indexes that we've got to pull back on. These are major indexes, obviously. You look at the S&P. We've really got nothing. I mean, as of the day before yesterday, we were literally trading at all-time highs. I mean, we're right up there, very near all-time highs. Yesterday, again, you can see we ended up managing to put in a green candle after we opened up down, as much as 10 or 12 points in the S&P. Just grinds back up right near the highs. So this is really important. And the Aussie has really been able to shake off pretty much everything as well. As you can see here, also looking much more like the S&P than anything else, just sort of hanging in there, up very near the highs. So, I think it's really important that we've actually been getting a pullback in some of these other markets. So the U.S. just cannot break, and I think we continue to be at risk. Every time this thing punches to new highs, that we can end up getting people caught in the short squeeze. Guys are starting to follow the European markets getting sold off, starting to follow some of these commodity share prices coming off. And when nothing comes off and guys are watching that, a lot of people starting to lighten up or get short, and then you can very easily cause a short squeeze. So I think it's just something to be careful of. If we don't get sell-off soon in the S&P, there's no. I wouldn't be surprised to see us continue to squeeze higher. All right. We'll start out with Nedbank here. Nedbank really a hard pullback. The last three sessions we've dropped over 10 bucks, so we've over 5% last three sessions, and you can really just see here out of this this big flag pattern that we've seen in Nedbank, really probably coming back to test support. I know it traded to as low as 203 and change yesterday, but we're looking at about 201.50, 202, somewhere in there, maybe support on this flag. So I think if it gets down there, personally probably maybe look to nibble a little bit. Probably a decent little place to add risk, especially as strong as they've been. Sorry, I just pulled up SAB. I wanted to pull up SAB London. I'll actually show the local one first as well. We have just redropped this 520 level, which we know how significant that 520 level is. So we dropped the 520 as of yesterday, and really dropping out of a bit of a flag pattern here. This is not classic because we haven't been in a long-term downtrend or uptrend, so it can be looked at as a flag pattern as much as this one can. But in the LSE, you can see here we have definitely been in a downtrend, obviously because there's no support from the rand, and we dropped out of what to me is really a beautiful flag as of yesterday, and we dropped it pretty hard. So I think that this could be the start of a bit of a sell-off on the SA breweries. I know that it got a benefit from some of the reweightings that were happening due to the Verizon reallocations there on the FTSE index last month. So I would expect this to start to be able to gather some steam to the downside if there's no news on it. All right, let's look at Harmony. Harmony, you can see here, really popped up out of the top of the recent highs. You can see here that from the bottom of this trading range, it really gives us a target up to about 40 rand on this continuation pattern. So this is quite symmetrical. I like the look of this. I would say 40 is pretty much a shoe-in here, provided the market supports, obviously. But you can. I also, I think it's bullish how we've kind of consolidated above the 200-day moving average here, especially after this thing's been absolutely decimated. So just keep an eye on that. I mean, Goldfields has also popped up out of the top. This one looks more like a flag, maybe than a kind of making a rounded bottom and a continuation pattern like that, like Harmony did. But nonetheless, this is also, I would expect us to kind of get up here and sort of test at least kind of around the 48 level, and somewhere around the 200-day moving average over the next few sessions. All right. The last one I'm going to show here locally is, it's Able. This chart, it's just so, we've gone from $30 to $9, so the chart's a bit over exaggerated here because of simply because of the height of it. So you don't necessarily see the percentage-wise the moves here as well. But bottom line is here we're definitely dropping some sort of flag pattern here. I would think that we're probably going to come back and test the lows here in Able, especially, our market, we had a hard rally in the financials here that this thing caught very little of. The market's also been rallying. I mean, this thing has had every reason to go. It just can't get up. We dropped back down out of this flag pattern and dropping, just barely dropping the 10 level. I don't see any reason why this thing can't come back and test $9 and possibly even go lower. This thing takes out the lows here at $9. I think guys really start to worry about long-term viability of this company. And then the last one I'm going to look at here is Glencore on the LSE, which is really dropping support. We can actually go back maybe a little bit as well. We'll actually look at it on a year. It's dropped support as of a couple sessions ago, but this is, this chart I think is somewhat telling, and it tells a different story to what we're looking at here on some of the the local charts, because it doesn't have the rand impact, and this is definitely starting to look a bit bearish for the stocks like Glencore. So we could we could start to see these kind of things evolving a little bit here in the local market. These mining stocks continue to sell off. It could really I think get a little bit messy, considering so many people have probably ended up on the long side over the last month or two. That's it for today, guys. Thanks a lot.